on the very first one, he trades futures, but for example, gold futures translates exactly the same to Forex gold, right? So gold futures is GC1, right? This is gold. And then let me just remove that. So this is gold. See how it looks on the 5-minute chart? Now, if I go to Forex gold, see, it's almost exactly similar, right? So the only difference is the price points. So you can literally run the same entry model strategies, the same analysis on either Forex or futures gold. It's literally the same thing. So it doesn't matter if you trade Forex or futures with these analysis sessions. So, Sean, what have you been watching the closest this week?
Really gold. I've been all over gold. If you look at GC1 on the on the daily, the key area for that is 33.15. It was now it's 33.15. It was like 33.10 before. And that's at all-time high anchored VWAP. But there's a convergence right there within 3,300 to 33.15 of the recent low, the recent high, and then all-time high, forming a lot of support here. Matter of fact, in my group this morning, I called them off shorts, even though technically intraday it was there was a short read. I called them off that I found that I believe there's too much support and the low a day was in. And actually, I think it dropped to 33.12 and bounced. So these key levels, guys, there's always going to be a standard deviation around them by a small percent because we're not the only ones seeing it. So you have psychological positioning, but that bounce at 33.12 wasn't a mistake.
Right down here, right?
Mm-hmm.
Yeah, that was a really strong bounce too. And that happened like right when the London session kind of opened, it looks like.
Right.
Yeah, first hour in the London session. So we had Asia session pushing gold down last night, and then the London session opened up and just ran it up, straight up, no resistance. So yeah, that's interesting.
Now we breached that high on the daily. I think we're probably gonna trend up. I would expect a test of probably 33.90 if it keeps chopping upward today.
33.90 is like up here. Okay.
Mm-hmm.
Okay. If you're looking at XAU USD on Forex, you can look at the similar price action. So this is a 15-minute chart. So we have some resistance, like a nice key level of resistance up at 33.90. And then we had this really strong demand zone support at 33.15. And we're kind of like in the middle of the two right now. So yeah, so Sean, let's do a top-down analysis on this. I'll go to the 1-hour chart.
Yeah, and actually, if you go out, yep, there you go.
Yeah.
And so, yeah, intraday, like after it's hit that low on the 1 hour, you see since hitting that low, it's setting a higher high and higher lows. So we are trending back up, and we're not going to go back down to that key level until we breach that recent low. If we keep setting higher highs and higher lows, it's going to be a little bit sticky here at 33.50. But I think we trend up to the top of what we call or the bottom of what we call the diamond there, that psychological diamond priced around 3,400. So you're going to see that lightning bolt pattern probably progress.
So you think 3,400 is going to be kind of a magnet for the price to slowly run up to?
Right. And we call it the diamond. So it usually starts at 33.90, about 10 points out, and can run as high as 34.90 or 34.10. Just people trying to opposite. Like as an example, you think it's going to your take profits at 33.99. Well, I got to make sure my order gets filled, so I'm going to go at 33.98, and the next guy goes at 33.97. That happens over and over and over. So you can see this on the level 2 data or heat maps or book maps, where psychological pricing is. We call them diamonds.
Right. So another term for psychological pricing is diamonds.
Yes, we call it because it diminishes at the bottom and the top, but it's full in the middle. So if you like the diamond shape of like a playing card is the kind of way it looks when you see it on. Yep.
So a lot of movement between the 2 points.
Right. And then the further away from the key price of 3,400, the less movement there is.
Right. Gotcha. Okay. So do you let's consider an anchored VWAP level on this price action. Is there any? I'll go to the 4-hour chart real quick.
Okay.
Okay, so we're looking at the 4 hour. Is there any point here that you would, in recent history, that you would mark your anchored VWAP to reference current price?
How far back years ago? I'm on the 4 hour chart, and I like the date of like May 14th.
Okay,
You
so
go back?
we're gonna go back a little bit further here. Okay,
Yeah,
so May
that low right
14th
there.
is that low.
Yep.
Okay,
Yep.
so guys, Anchor VWAP is a tool in TradingView that's built in. You can find it on the sidebar here. You have to manually place it, so it's nice because it's not a purely mechanical indicator. You need to manually place it yourself. So it's a combination between your own analysis and indicator information. So you just click on it, and then you click on the low of a hard price reversal generally, and
Yep.
what Sean likes to call a catalyst that had caused this run. What do you know what this catalyst was here that might have caused this reversal?
I do not off the top of my head, but look what the price action did on that. Look how many times it found support, even
Yeah.
most recent.
Yeah, I mean, look how powerful this is, guys. Look at this. So we have a look, it's almost perfect here. This is the 4 hour chart. I mean, imagine if you're taking entries on pullbacks right off this line here. This is perfect. This is perfect. And these are strong runs. Like, look how strong this run is. If I go from right on that anchored VWAP line here to the top of that run, that is $132 move on gold. That's
That's
wild
crazy.
before there's any
Crazy
sort of
leverage.
pullback, right? And look, we have
Hmm.
this another thing right here too. That one is another almost $85 move on gold. Obviously, you're not going to time the top perfectly, but there's a lot of profit to be made during runs like these off the anchor VWAP, right? So the entry would be relatively easy to get, and then you would just exit, based off of your strategy.
Or
Yeah,
even you just trailed it. You'd be kicked out on a trail eventually.
yeah, exactly. And then look what just happened.
Hmm.
Look what just happened, guys. We just hovered that anchor VWAP zone again, and now we're running up again, right? So that's very interesting. This anchored VWAP is something I believe institutions are looking at, right, Sean? This is the one indicator that a lot of bigger institutions use in their analysis.
Right. So I had a video. One of my recent videos went viral, and I had, all the know-it-alls come out and said, "Well, it's not good technical analysis because you're not using the RSI and you're not using this indicator and that indicator or Bollinger Bands." Well, fact of the matter is, there's a lot of good indicators. Now, my point here is, I weight all indicators about one. So if I use 3 indicators on a chart or 4 indicators on a chart, I weight them equally, except the anchored VWAP. I weight it almost a 2 because institutions use it as one of their main factors in buying and selling. So when institutional money uses it, us retailers need to pay attention.
Right, right. So in this situation here, where we had a nice bounce off of that anchor VWAP zone, would it be acceptable if we had a pullback back to that? Oops, sorry. Let me pull it. If we had a pullback back to that level to retest it, is that another case to go long for an entry?
Absolutely. And to be technically correct, book correct, you don't buy the actual level, you buy the confirmation right after level. So if you look at where you have that near retest, that's the white candle is your confirmation of that positive test. So on your drawdown, when you're saying price may retrace, if it retrace and then hits there, might throw a doji and then bounce, and you get a nice green candle with volume afterwards, that's your textbook entry. I like to size in on them and then minimize my risk just on the other side, and then add to it on the confirmation because I'm a little more
Okay,
aggressive, right?
right. So you would enter in down here partially, and then you do more partials after the confirmation.
Absolutely. And I can reduce my risk by using just a standard deviation below that anchored VWAP. So I'm partial leveraged and I'm tight on my stop loss by buying
Right.
at that VWAP.
Okay, so I think everyone understands. This is a really good buying opportunity down near this anchored VWAP zone, which is around 33.15 on gold. That on XAUUSD, guys, I'll pull that up really quick just so you guys know what it looks like on that. This would be this level right here. Oops, let me pull that. It would be around. Ooh, that's actually kind of nice. I would say it's going to be very close to 3,300. Which is even better because that's a psychological number on XAUUSD, right? So this is the key level we're looking at. It aligns very well with the Anchored VWAP. I can also mark it on this one here. It should be similar. Yeah, see that? So it's very similar to gold futures. So you can do this analysis on both assets. So, Sean, with the current market conditions, what would be your play currently on gold as it's kind of hovering between these two key levels right in the middle of that diamond you were talking about?
Well, if you're looking to trade it intraday, right now,
We can go down to a lower time frame real quick and just
yeah,
take
right.
a look here. Okay.
Yep. So I look at the hourly to determine my intraday bias because I'm only trading, and we're long bias because we have the EMAs crossed positively here.
Let me pull that up. Yeah. So I'll pull up the two EMAs. I don't know what happened to them. I think I accidentally removed them. EMAs. Okay. So I need a 21 and a 21 EMA, I believe, right? And a
Yeah,
9?
I used the 9 and 20. A lot of people
9
use the
and
21.
20.
I use the 20.
Oh, 9 and 20. Let me use what you use. I'll put 20 on here. All right, so we have 20, and then we'll make what color do you normally make the 20?
Blue.
Blue? Okay,
And
and then
the 9 is yellow. I like the smaller time frames, brighter colors, so I know it's the faster moving EMA.
all right, let's make
For
that
those who don't know,
yellow.
an EMA is an exponential moving average, and the reason why there are moving averages, there are simple moving averages, there are LMAs, there's EMAs. The reason why I like exponential moving averages is they are weighted to the most current data. So if you had an EMA on there and an EMA, they're going to be different, but because I'm trading on the fastest time frame, I want it to be weighted to the most recent data. That's why I use EMAs.
Right. Yeah, I like EMAs too because the most recent price action is the most relevant, right? When it's determining the
Correct.
average. Yeah. Yeah. So last time, guys, in our last session, we had made a note that the angle of the EMAs is actually more important than where the candle is
Touching
in
it, right.
terms of above or below the EMA. So looking at the momentum, so there's a lot of bearish momentum here because look at the slope. It's like a very steep ski slope. And then over here, right, it's very horizontal. So it kind of signifies potential choppy market conditions. So it's not, even though we have price above the EMA lines here, the momentum is still kind of bearish. So that's something to consider. Just because the price closes above an EMA, it doesn't necessarily mean it's a good buy, right? What we want to see is a situation like this where we see momentum starting to shift on the 1 hour chart here, and they're just about to cross. That could be a very bullish signal, correct, Sean?
Yes, correct. So anytime you have a faster moving EMA crossing above a slower moving EMA, that is a buy signal.
Right. So it's looking right now like at the current price action, there could be, for you, would there be a potentially good buying opportunity?
Yeah. So what that's telling me is now I can be a long buyer. So you can go down to the 5 or 15 and try to
go
buy
to
the
the
same.
5. Yeah. Okay, so we'll look at the 5 here.
So you could have either bought the last 5-minute EMA cross, or you wait for the next one
here.
Right. Or since we're just now crossing on the hourly, you wait for the next 5-minute. And then you could also do it on the 15-minute, depending on how wide your time frame is.
Right. We crossed quite a while ago on the 15. Well, it's almost the same spot actually across.
Yeah, exactly. So that was a really clean buy signal. So what you do now is you wait for the next one to develop. You have patience and you wait for that next one.
So basically what we have to wait for here, guys, instead of buying the top of this move, well, we don't know if it's the top, but there's a higher probability that, the move will eventually find a top, right? It's just not going to run up forever. So it's always better, if you want to go long and with this price action, it's always better to let price pull back a little bit here, form some new structure. There's always opportunities in the market. You don't have to worry about if you missed it, right? Because you can just wait for the next one. And then we can wait for a little bit of sell-off, right? And then the EMAs will come down, cross, and then we can look for a long, I went that way, going back in time there. But the EMAs would come back down, and then some buyers step in, they would cross again, and that would be another good time to buy, right?
Right.
Yeah.
So probably, estimating right now, probably around 33.45 is where you're going to get that confirmation after a slight drop.
Right. Right. And then just to wrap up this gold analysis here, Sean, if we are looking to enter in, let's say we entered in, let's say we're back in time here and it crossed here, right? And what I can do here is I can go to replay mode actually, and right here. Okay, so let's pretend this situation is happening in real time. I'll just delete that arrow. EMAs are crossing. We had nice bullish candle closing above it. We bounced off that key level. We're bouncing off of a pullback, I guess, right? What am I doing here in terms of stop loss risk? What would you recommend?
I would use that local. I would use that local low, that swing low on that wick there, just to the left of your cursor, as my initial stop loss when I get on the board. And then I would target on this 5 minute. I would target $10 on this read.
Okay, so it would kind of look like this, which is about a 1 to 1.3, right? So
as a trade develops, you can reduce your risk, but immediately upon entering, I'm going to use that local low.
Okay, just to give it some breathing room there, right? And in terms of a day trade, guys, a $7 stop loss on gold is actually pretty aggressive too. So there's a lot of volatility, especially in gold. What I like to use too, if you want to even be more forgiving, guys, you can go to the 1 hour chart, and I say this all the time. Go to the 1 hour chart, pull up the average true range indicator here. And this is good because if you trade multiple assets, this is relevant for every asset, right? So the current 1 hour ATR is around $10. So you can use that level as a stop loss if you want to be a little bit more forgiving on your trades, right? And the more forgiving you are on your trades, the easier it is on you psychologically. You have more breathing room in your drawdown. The only issue is, your risk to reward isn't going to be as big. Or if you want to go for a positive risk to reward, then you have to increase your stop loss a little bit. Because if I did this, $10 move there, and let's say I wanted a 1.5 to 1, well, then now my trade kind of looks like that, right? So that's just something to be aware of. Hey, what happened? I thought I was, I went to the 1 hour. That's why. Yeah, just like that. Okay, so that would be the trade setup in this situation. Once the EMAs cross, bullish signal, that all looks good. Does anyone have any questions while we're on gold regarding gold, just before we move on to another asset? Because
there's one question in there about in terms of TP, should we consider a previous day high or previous day low? For sure, the price always going to set support and resistance. If I get a good read up against those, I would consider the read more than the support or resistance level. Because if you're getting a positive cross, if you're long, you're getting good volume, chances are that previous day high or previous day low isn't going to hold. But you should always consider them in terms of your key levels.
Right. Yeah, makes sense. Yeah. See anyone else in terms of TP? Oh, someone has an ATR info table. That's interesting. You guys can check that out if you want. Okay. Sounds good. All right. So that's a nice breakdown for gold. I think we covered everything relevant over the upcoming, couple days, because we're right in the middle of that zone right now. So that's a good game plan.